Walmart. Ticker symbol is WMT. It's currently trading for $129 per share. Pays a dividend 4 times per year. And the last one I received was for 47.6 cents per share. So if you're unfamiliar with Walmart, it's basically an absolutely enormous grocery or shopping retailer. So they sell their products online and in store and have a total of 2.3 million employees. They were founded in 1962, and since then their share price has grown steadily and their dividend has grown steadily. They generally sell consumer products, and the appeal of Walmart over a lot of other stores is their low prices. So they have an international segment which is divided into 2 categories, which are retail and wholesale, and then they have their domestic segment, which is in the USA. The current market cap is $348.9 billion. They have a PE ratio of 20.11. Current revenue is $572.7 billion, an earnings per share of $6.39, and a current dividend yield of 1.74%. Over the last year, their profits are not great, but still in the green. They're 2.39%, and over the last quarter is about the same, 2.21%. Their annual debt to assets ratio is 66%, which is not fantastic, but there is much worse ones out there. And over the last quarter is essentially the same, 66.4%. And their annual cash flow from operating is $26 billion. From investing is negative $6 billion. And from financing is negative $22.8 billion. Now this is what you want to see in the growth of share price of any company, but especially a dividend paying stock. Absolutely wonderful to look at. So they were founded in 1962, and this graph goes back to 1982, so it's very good for the long-term history. And even some of the biggest market crashes in the last few decades are minor blips on their share price. So this is the tech bubble, 2000. Here's 2008, financial crisis, holding strong. And up here, this little blip is lockdown in 2020. They've grown quite a lot since then. It was $118 during lockdown, and it went up to close to 150 briefly over it, and now after this drop it's back down to 118. So it's around where it was during lockdown. Currently Walmart has a 52-week high of $160.77 and a 52-week low of $117.27, and the dividend history also very nice. So as we can see, growing consistently. It seems to have always paid every quarter. Don't see any gaps in the history. That may be a bonus one. There's not much details given there. But as you can see, very gradually growing. The share price is growing, the dividend is growing, and they have 2.3 million employees. That's no joke at all. The one and only thing that might not be attractive is the fact that the dividend is less than 2%. But it's still good. You know, the kind of sweet spot, I think, is between 3 and 5%. And anything over 5 is getting a little bit risky. But this is perfect. Now, there's no wonder that it's such a popular dividend stock. So to summarize, I think anybody who's invested in US dividend stocks should have Walmart in their portfolio. Now, it could fall. Of course it could, because inflation is rampant and things are pretty uncertain for the future. But it's one of those industries where people are always going to use it. Like, the only way that Walmart could fall from grace is if a lot of very, very serious economic factors pile up against them and they have absolutely terrible management. But it's just one of these absolutely fantastic companies in an essential sector and an essential industry. And they're not only selling things in store, but also over the internet. So they're covering quite a lot of bases. You know, if you had invested in Walmart in 1982, it would have cost you 60 cents per share. And today, every one of those would be worth $129 after a recent dip. So this one is short and sweet, but all I can really say about it is if you invest in American dividend stocks, you should have Walmart in your portfolio.